Welcome, everybody. As always, it's good to be here today, ready for our session. And it's Friday, as always, so that means not only is it time for our live stream, but also uh, with weekly options going on, there's going to be a lot to talk about. Um, I don't have any current trades that are set to expire this week, but we do have a couple coming up in the next couple of weeks. And that means that with still about a week to expiration for a couple of trades and a little bit more for a couple of others, that means that there's a good opportunity to look at things kind of in the moment while the market is moving today and see how they're going. Um, Hopefully, we'll get a few more people coming in as we get things going. But let's go ahead and dive straight in. Um, Couple of really simple things really quickly before we do anything else. You can interact with me or with the group uh, through the chat area on the right hand side of the screen. I'll be paying attention to that throughout the course of the live stream, and we'll be looking for opportunity comments from you to kind of guide the session a little bit. Hopefully, we'll see some if we can get some participation. Then that'll be something that'll help to augment the discussion that we'll be going through. Um, you can also like comments and do emojis and those kinds of things to kind of show engagement, and those are things that the YouTube algorithm finds to be useful. All right. Good morning. Looks like we have a new participant, and I'm excited to see you here. JW Talks Life. That's awesome. Welcome. Excited to have you here. Um, All right. So with that in mind, this live stream is really about trying to look at some of the trades that we've been focusing on. You've seen me publish in trade alerts in real time and see where they sit. Talk about how those things impact the how current market conditions, I should say, impact those positions and some of the decisions that you might be needing to make relative to them. So, with that, let's go ahead and dive in. We'll probably have some time as well to go over some questions that you may have outside of the context of these trades. If there's some stocks that you're interested in that you may want the group to look at or have me take a look at, we're certainly happy to do that as well. Okay. Um, excuse me. Let me go ahead and switch over here. This is my track record where I keep track of the trades that I place each week. And like I said, there's nothing that is on deck to expire today, but that does give us a good opportunity. Gib, can I use a mic when using the Yahoo connection? I got the headphones for Christmas. Awesome. Congratulations. Maybe. The only thing I can as far as trying to talk to me or talk to the group, Gib, I'm going to say probably not. The live stream isn't really set up that way. It's kind of designed to be just a one person speaking, giving a presentation, kind of like a podcast. So I don't think there's going to be that kind of interactivity. All right, as I mentioned, um, there's nothing that's set to expire today, but just kind of looking at what is on deck. The first one that we've been tracking for the last couple of weeks is the put sale that I placed on CTRA in the middle of December. This was a trade I was able to sell the $25 strike price on this stock. This is a stock I've followed for quite some time. So this is a 30-day trade, brought in 40 cents per share on the put sale. That may not sound like a whole lot, 1.6% for the 30-day period. Um, one of the things that I think before we really dive into the details of the trade and the stock is to kind of remember what our objectives are. Um, a lot of people, and you're going to see me throw out some annualized numbers for some of the things that can be done when you're using the put selling strategy on an annualized basis. Excuse me, I apologize. Fighting a little bit of a cold. That's just kind of illustrate what the overall long-term benefits can be. But on an individualized trade by trade basis, um, this is really about just trying to put each trade in proper context. My only real target when I'm placing these trades in terms of the total return that I'm trying to chase is to get about on an average 1.5% per month. Now, if you think about that, 1.5% per month is really pretty conservative. Wow. All right. Because that really only translates to about 18% per year. Now, that's more than functional. And a lot of my trades, I'm doing 1.5% in a matter of a week or sometimes only 2 weeks. So my return numbers are often higher than that. But that's really kind of the benchmark that I'm trying to hit as in order to determine whether a trade is worthwhile or not. So at 1.6% for 30 days, this was actually a very nice trade overall, even though it may be a little bit more conservative than some of the numbers that I show here on my track record for other trades. So I'm really only trying to think about what is good enough. I'm not necessarily trying to beat the market. I'm not trying to beat other traders or anything like that. I'm not chasing the highest possible return. I'm really only trying to think about what is good enough in the moment for the trade that I want to place. Okay, with that in mind, then, $25 is the strike price that I sold. So that is the reference point that I have to keep in mind for my put sell. I sold 3 contracts on this. And so that dictates exactly what my overall reserve requirement for the trade is. 3 contract controls 300 shares. So when I multiply that by 25, it means that my total reserve requirement is $7,500. Now, to put that in context of what the total account size is, let's just go with 304. Oops. 7,500 divided by 304,000. And I've been trying to keep, as a general rule for position sizing purposes and trade management purposes, I've been trying to stay between 2 and 3%. In most of my trades, and in fact, lately I've even gone a little bit below 2% in many of these trades. This one went to about 2.5%, so it's right in the middle of that maximum range that I'm willing to work at right now. Under normal circumstances, sometimes I may expand it up to a little closer to 5, but as a general rule, I like to be more conservative with my position sizing than more aggressive. Um, Again, there's a temptation for a lot of put sellers to try to chase as much income as possible on every single trade, and so they tend to overload their position sizing. I'm trying to avoid that because I'm trying to think about not only how many trades I have that I am managing at any given time, but I'm also trying to think about the total amount of risk that I'm being exposed to. Remember that when I sell the $25 strike price here, this is the price that I could be forced to buy the stock if the stock is below 25 at expiration. So let's take a look at the stock right now. And it's just a little bit above it right now. Dipped a little bit below to start out the week. Give me just a second here. I need to pull up my presentation tools. Oops. Apologize, did not want to pull up my email. There we go. Okay. So we saw come down here a little, it actually dipped below 25, came back up. It's using 25 as pretty good support right now. And so that's an overall positive thing. We do have the 200-day moving average here that is just kind of drifting lower right now. But for the time being, it's acting as support. Um, looks like we have kind of limited upside between 25 and about 26.50 on the stock. But again, from the standpoint of what I need in order for this put selling trade to be functional, this is also a pretty good range. So if it starts to consolidate between 25 and 26.50, it starts to really confirm these ranges that I've outlined here. That's a good thing. That would actually provide probably multiple opportunities. Even if I do get assigned the stock, this range could be an opportunity to sell a lot of covered calls. If the put sale expires worthless next week, then it may be a good opportunity to turn around and um, lather, rinse, repeat. Sell a new put sale the week after that on the stock again. So we'll see where this goes for the time being. With a week another week of time decay having taken place, that does also, and with the stock above $25, we do have an opportunity here to consider in real time whether or not there's an opportunity to maybe think about trying to manage this trade a little bit more actively, buy it back from the market, those kinds of things. People who like to manage these trades on a more active basis usually use 50% of the premium that they brought in from the put sale as a benchmark. If uh, if the stock's momentum is moving nicely and you can buy the option back for about half of what you brought in, then they'll usually seriously consider doing that, especially if you still have a week or more to expiration. That offers an opportunity to increase your trading frequency and therefore enhance the compounding effect of these trades. So with CTRA, we have a widening distance right now. Here's the 25 strike price. We have a widening distance between the bid and the ask. If I wanted to try to cycle this trade, um, roll it in effect, then I would actually have to pay more right now at the current asking price in order to do that. Let's take a look at the details on the contract here, though, because probably just means there's not been a lot of activity. Yes, we don't have any volume yet today. That's one of the primary reasons. There's plenty of open interest, and the previous close was 25. So this is a little bit exaggerated. There's a fair chance on this if you were of a mind to try to roll this trade. Maybe for whatever reason you don't want to wait the extra week and let that time decay work out the way that we just talked about. Um, if you're simply trying to avoid the put sale, then there may be an opportunity here to set a buy to close BTC. This is not a recommendation, by the way. Just I'm kind of thinking out loud a little bit here. Buy to close at 25 cents. You could set that order with your broker possibly. If you're willing to wait for the market to come to you, um, there's a fair chance that trade might get taken. There's certainly enough open interest right now, and that would hit the 50%. Well, that'd be a little bit That wouldn't quite be 50%. I take it back. I brought in 40 cents on this, so it would need to get down. We need to see the bid drop a little bit more and see the ask come up, come down to that 20-cent level in order to make that worthwhile. So we're not quite there yet. As far as what I would do with this, I'm okay with that because that means that I can just keep letting time decay work on this, and I can just keep letting the stock keep moving the way that it is, and keep using the 200-day moving average here as support. It is coming down a bit, so we'll see. It's possible that bid and ask may contract and maybe even drop a little bit. If it can bounce and start to go back up, that may happen. Otherwise, we may see these prices go a little bit higher. So we'll see. So that's CTRA. Is it my normal method here with these trades? I'm not one who is trying to close out these trades before expiration. My method is to set the trade and let it run through expiration. If I end up getting assigned, then I buy the stock. I like this. I like CTRA at 25. I think it's worth a lot more than that, and it pays a reasonable dividend. So I set these put selling trades with the active understanding that I may be forced to take an assignment. That's how part of how I build my portfolio. The dividends from the stocks that I am assigned offer a passive income source, and that's useful. Excuse me. And also the stock, the additional price action. Once I own those stocks, often offers opportunities to sell covered calls and effectively pay myself additional dividends beyond the regularly scheduled ones. And so we'll see where this goes. That's why I often say I let the result be the result. So we'll see where this one lands. If any of you are also in CTRA, you want to throw out and share your numbers for what your setup is, that's awesome. I like it when people are doing better than I am. If you have any questions on this one, please don't hesitate to put them in the chat as well. All right, let's go ahead and move on to the next one. Also on the 16th, also next Friday coming up, I have a put sale on Target, one of the last of the real big box retailers, right? And sold the $92 strike price on this one, brought in $1.55. Now that sounds a little bit better. This is a 3-week trade, brought in 1.68%. Again, this is maybe a little bit better than the 1.6% for 30 days, but still pretty conservative return. But this is a nice setup. This is where, again, I'm thinking more about what is good enough than anything else. I placed this one on Christmas Eve, so right before the Christmas holiday. So let's take a look at Target, see where we stand right now on that one. And this is a stock that's been picking up quite a bit of momentum since late November. That's part of what set up the opportunity. It was this little dip right in here that set up my put sale. And we can see the stock has really started to lift off. It is well above 92. This is my strike price all the way down here. I was able to sell out of the money by quite a bit when I placed this put sale. Christmas would have been right around here. So we're seeing a lot of momentum here with a week to expiration. That means that the value of this particular contract will almost certainly have changed. Again, for reference here, I brought in $1.55 on my put sale. So let's see where that one sits right now. I'm going to need to expand this. Huh. Even 24 wasn't enough. All right. There we go. 30.92. This is this week. Here we go. All right. So here's 92. The asking price is 16 cents, which is very well below the $1.55 I brought in here. So this is one where the stock has lifted far enough away that we've still got 7 days to expiration on this. There is plenty of open interest in this contract, even though there hasn't been any volume so far. There's enough open interest here that I could simply not monkey around with the market at all. I could probably put in a buy to close at 16 cents, and I would very, very, very likely get that almost maybe not right away, but within a very reasonable and short period of time. What does that do? What would the benefit be? Well, the I only sold one contract here, so this is a little bit closer to my 3% position sizing rule. But not only would that eliminate the obligation associated with the put sale, also allow me to keep really almost 90% of the premium that I brought in, which is nice. But the other thing that it would do, if I were to buy this back right now, and this is why some of our rollers would be screaming at me right now, be asking me why I'm not doing exactly what Barry is saying right now. He says I bought it back to roll it up a little, but it took off, so I backed off. And I think that makes some sense, Barry. There is an opportunity here with still 7 days left where I could buy this back. I, excuse me, there's probably not a lot of risk that the stock is going to fall back below 92 between now and next Friday, but it would also free up the $9,200. Would I want to work with Target at this higher price? The value is still there, by the way. So this has not rallied so much that the value proposition has really changed in a material way. Not enough to invalidate it in any event. But at this point, the way that this is accelerated, we need to think about the sustainability of trends. This is a short-term upward trend. It is very nice. It's certainly very impressive, but the simple slope of the trend itself, including the 20-day moving average, really suggests that this at some point needs to start to pull back a little bit. We need to see some drawdown on this, possibly. What is this? Probably about 98. I'm guessing maybe 99. And so if I want to think about momentum, even if the value proposition is here, with the stock up around 107, maybe looking for another put sell would be a little bit smarter timing wise, waiting to see that if the stock actually does pull back and find support down here in this area. And if it does, then maybe there's another opportunity there. If it doesn't, if it continues to continue to rally upward and maybe the trend begins to go parabolic, that does happen sometimes. Well, then, you say, okay, well, that's the way it is sometimes. That's okay. But buying this back would still free up to that $9,200. It would also shorten the duration of my trade from 23 days to 16. So it give me an opportunity to increase my trading frequency, even if I'm not continuing to work with Target. It would still give me an opportunity to accelerate my compounding by placing more trades using the $9,200 I put in reserve for this trade into some other stock. There's certainly plenty of candidates out there. So what I think Barry said makes some sense here. Yeah, Barry, thank you. He says with buying it back, you still ended up with 1.77% on the trade, and that's exactly what I'm driving at, which is that when you get momentum like this, you still have an opportunity, and that's why Barry's getting a tick mark. Thank you, Barry. You know, that's why there's some virtue in buying this back early. Is you have an opportunity to still claim a big portion of the income that you brought in. So you're really not doing yourself. You're really not. The phrase I was looking for is not quite there. You're not doing anything bad, right? You're still giving yourself a really really nice result, and in fact, you may be doing yourself a favor because you are eliminating the potential downside risks. One of the things a lot of people that are associated with put selling, we have to think about, even if you're willing to take an assignment, is that sometimes those assignments happen. You've got to remember they only happen if the stock has dropped below the strike price that you sold. So I sold 92. The only way I'm going to be assigned at 92 at this stage is if the stock drops by what, almost $15 per share from its current price. Well, if it's dropped that far to assign me at 92, what are the odds that the bearish momentum is going to be significant enough to push it even further, maybe down, I don't know, 90, 85, 80, who knows? That is something that does happen sometimes with these stocks when you're working with put sales. So there's some wisdom, not only in rolling and trying to look for another trade to accelerate your trading frequency, but just from the standpoint of trade management. Sometimes there's some wisdom in saying this has moved far enough. I could hang on to 90% of my premium right now. Why don't I go ahead and do that? Okay, so that's Target. Barry, thanks for sharing your numbers with us. Really appreciate that. That's really useful. Um, the other trades that are on deck are coming up in the weeks ahead. So we have the put sale that I placed on Oxy. That's not Oxycontin, by the way. We're not talking about drugs. This is Occidental Petroleum. I sold the $41 strike price and brought in $1.06 on this. This was also a 3-week trade, and implied volatility and volatility in the stocks a little bit higher than they were for either CTRA or Target right now, and that's why the return on this is a little bit higher. I was able to bring in almost 2.6% on this one. Again, I sold one contract. This is a much more conservative position than the other two that we just talked about, because with the $41 strike price that I sold, having sold only one contract, that means my total position, my total reserve requirement is only $4,100. So that's actually below 2% when it comes when I'm thinking about the total position sizing profile here. Just to kind of do the math. (1.3%). So this is really conservative. I could have sold an extra contract and only been a little bit over 2.5%. So still very well within the 2 to 3% that I said that I'm sometimes willing to do. Occidental, even though I followed the stock for some time, was kind of a new entry in my trading rotation. And that was one of the reasons that I decided to go with a little bit more conservative position size. Just haven't used it as much as stocks like Target or CTRA or some of the others that I have here. Bristol Myers, that was this week's put sale. So I decided to go with a little bit more conservative and see how it went. But brought in $1.06 here. That is the reference. Let's take a look at the stock on this one. Having sold 41, it's right about here. So again, we're seeing some nice momentum on the stock since then, pushing up towards 44. Now this one still has a couple of weeks to expiration, but this is one where with those couple of weeks, and I'm only about a week into this trade, by the way. Well, I'm a little bit more than that, sorry. 10 days roughly. Let's take a look at Oxy. Occidental Petroleum. And this was set up for the 23rd. Okay, I'm going to have to expand my strike prices again. Let's go to 12. Here we go. Again, my reference here is $1.05. Asking price right now is 34 cents. 2 weeks to expiration. That's actually really, really nice. That is very interesting. And that does make the idea of rolling really interesting. There's not as much open interest, but there's enough. When I use open interest as a barometer for how much liquidity there may be in a contract, I'm really only looking for maybe 100 contracts in open interest in order for there to be enough liquidity to be useful. Any volume is also useful. I don't really have a set number that I look for there, but it looks like I could, if you didn't want to, if you're willing to work and take 34 here, there's an opportunity to buy this back right now. And if you brought in a premium anywhere close to what I did, you'd still hang on to, what is this, about 61 cents? No, sorry, I'm wrong. 71 cents. $0.71 per share. That would not be a terrible result. And it would set up an opportunity to work with a stock. It's not so far away from where I started, even though we're seeing some lift right now. It's possible, even working with the same expiration, coming up here to, with the stock, what is this, a little bit below 40, 43.50 is where it's at right now. Boy, Barry says your put sale expired, worthless last week with 2.13% yield. Nice. He bought the stock outright last week at 41.35, and has since sold the $42 call for 2.17, 2.17%, I should say. So Barry, you're in a really good spot with this, right? I'm going to give you 3 marks because you placed 2 trades where I'm still working on 1, which is really nice. But even this is interesting because I still have 2 weeks to expiration on this at my $41 strike price. Again, some of my friends are good. They really be just screaming in my ear right now as to why I'm not doing this, why I'm just going to let this continue to play out, but I am. But look at what this is. You could buy this back for 34 cents, hang on to 71 cents of your premium. 0.71 divided by 41 is still 1.73% with 2 weeks to expiration. So not quite as good as what Barry ended up with, but still pretty nice. And then if you still wanted to continue working with the stock, here at 43.50, you could even shorten. You have an opportunity to shorten the duration of your next trade. 69 cents available on the bid at 43.50. Again, there's still a very attractive value proposition at that level. So 0.69 divided by 43.50, 1.58% for 7 days. If you can do 1.58% every week for an entire year, that's 52 trades. You're starting to hit the 82.4%. This is where I said earlier that, when I like to show how put selling, if you look beyond the conservative numbers per trade, you really think about what happens when you can do this on a regular basis over time. This isn't necessarily 82% of my account. This is 82% of the capital that I'm working with. So what? $4,100 is my reserve requirement right now. This would increase it to 43.50. So my numbers are probably going to be a little bit more moderated, but still, this is on the $4,100 to $4,500 of capital reserve that I may be working with, depending on where the stock is at. This is an opportunity to really do a lot better than the market is doing with that same capital. It's a lot better than sticking it in some ETF, index-based ETF, and just waiting for it to go up. The market, I saw reports say the S&P 500 went up about 17% in 2025, and talking about how great that was. Sure, that's fine. That's something that gives the market the rest of the market some lift, and certainly offers good opportunities with the kind of trades that I like to place. But the truth is, it's not too hard to beat what the market is doing if you're managing these trades correctly. All right. Gib, can you walk through the value proposition calculations now that Microtrends has added the pay-to-play system? Yeah, I totally dropped Macrotrends, to be honest with you, Gib, because I am cheap and I don't want to pay to play. The thing that I'm looking for with my value analysis is I'm looking for historical trends. And the nice thing that Macrotrends has, if you are paying to play for them, yeah. Birds of a feather, Gib. Birds of a feather, my friend. What I'm looking for is the ability to establish a long-term trend of these valuations, price to book and price to cash flow, that I'm primarily looking for. And the nice thing about Macrotrends, if you are paying for that service, is that it gives you a lot more than the 10 years that I decided I would be looking for, or excuse me, 5 years. That's really what I was looking for. Is gives you every single quarter by quarter, over. I think it's about a 10-year period roughly is where it times out. But since they instituted their pay-to-play system, I switched to Morningstar. Morningstar's been around a lot longer than Macrotrends has. That doesn't mean that the Macrotrends data is bad. It's definitely not. but I could get more out of Morningstar if I were paying for it, just like any other of these services. But what they offer for free, even without a free trial, are annual averages. And I decided that that is more than good enough. I can go back instead of 5 years. Now I can do a 10-year history, near a nearly 10-year history without any problem. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. There's 10 years. 2025 all the way back to 2026. So my spreadsheet doesn't look a whole lot different because besides being cheap, I'm also a little bit lazy about marking this column. But effectively, instead of trying to go quarter by quarter, I've switched my analysis to yearly averages over a 10-year period instead of a 5-year period, just because that's where the data is coming from. But it's a really simple evaluation. And I've got Nike here, but let's do another one. Give me a second. Let me. While I'm hunting for a stock to use, if there's one that you have a preference for, feel free to shout it out. I'm happy to go through this. I appreciate the question. Yeah, it's going to be a little bit. Let's try. Here we go. Let's do Westlake. This is a materials company I followed for a little while. So, and it's been a little bit since I ran through a really detailed analysis on these guys. So, let's take a look. Nike. Need to pull a little bit of additional data here. So, WLK. Their current price, 78.71. Book value, 77.47. Interesting thing about this is the decline from June to September. I don't like seeing book value decline. Sometimes that's not a categorically bad thing, but something that doesn't inspire a ton of confidence. But let's see where this lands. So we're at 77.47 on the book value. So 102 is the price to book ratio. Switch over here to valuation. Okay. And price to cash flow, 9.16. And so now I'm going to follow my chart, follow my table here for Morningstar from right to left, not left to right. And then I'm going to fill in my spreadsheet for as far as it goes. It'll go down basically to about here. So let's go ahead. Let's see here. 8.52. Oops. Wrong cell. 8.52 right there. 8.93. 7.97. 3.43. 5.12. 6.7. 6.95. 4.53. 10.74. And 8.76. And I calculate my average right to that 10-year mark. So it puts it based on price to cash flow, 62.40. So that's actually below the stock's current price. That's we'll see. Let's do the price to book now. 1.38, 1.67, 1.36. Price to book is looking a little bit better than the price to cash flow, so be interesting to see where this lands. Okay, again, only comes to the two. Let's see, I need to shorten this up a little bit. There we go. So 141 there. So when I combine those two together, I get a overall fair value here. Oops. Overall fair value at 101, a little under 102. So about 29% upside from the stock's current price. That's interesting. I haven't run through the rest of the numbers in terms of, balance sheet, net income, overall cash flow, free cash flow, those kinds of things. So I can't speak to the overall fundamentals here, but this is interesting enough to make it look interesting. And again, from a contrarian's perspective, got a couple of different elements here. Long-term downward trend is seen by the 200-day moving average. Short-term upward trend with a very impressive rally for the stock from 55 up to just a little bit below 80 now, right? So you got kind of this wedge formation showing. And it looks like the stock trying to break above the 200-day moving average and a value-based target price at about 102. So possible upside. Let me change my colors here. So you got about that much room possibly between the stock's current price and where that value target is. If it were to get up into that area, we would definitely be looking at a long-term upward trend reversal to the bullish side. So take it or leave it. I don't know. That's interesting though. Does that walkthrough of my valuation analysis, does that help? I hope it does. Let me know if there's any other questions there about how that works. It's really it's really the way that's really about the full extent of the way that I do my valuation analysis. So it's not rocket science, I should say. All right. The only other trade that I have on deck was this week's put sale. Bristol Myers. This was a stock that I had held for a little while. Was called out of the position with a nice overall gain. Thank you, Gib. Nice overall gain on this position when I was called out. Had a nice overall result. Dividends, capital gain, all those things, all considered, was an overall nice result on this. I didn't get a ton of capital gain on it, but I didn't need it. Had covered calls, dividends, etc. The put sale that gave me a nice result from Bristol Myers. Put it back in the rotation this week. Selling the $55 strike. Again, this is a conservative trade, 1.51% over 3 weeks. That means, again, remember I said at the beginning of the session, my target yield is an average of 1.5% per month. It means sometimes, depending on what I'm finding available in the market at any given week, I have placed trades in the past that were a little bit below 1.5% for the time period that was available, 2 weeks, 3 weeks sometimes, even 1 week, just because, when you annualize that, you're still doing really, really great. So 1.5% is just not necessarily my average per trade. That's just my average per month. That's all I'm really looking for. You can determine if you want to do something different, but I'm just looking for good enough. So this was about a 3-week trade. Let's go ahead and take a look at where the stock is at. Again, I sold the $55 strike price, and that was just on Wednesday. I had been looking to try to get somewhere in the $53 range. Stock's momentum, however, on Wednesday was all the way up here, and so sold the 55, which is right about where current support for the stock should be. It's basing it on these pivot highs, and so I decided 55 was probably good enough. Barry, again, really good example of what I was just talking about in terms of finding good enough, right? He did the $56 strike expiring next week, brought in 1.43%, but with a shorter time period. I've still got 3 weeks to expiration, and yours was what, 9 or 10 days. So 1.43%. Let's just figure that you're talking about probably about 36 trades, right? Even if you're talking about 10 days. Oops. Let's do 365 divided by 10 days, 36 and a half. So 36 trades, right? 1.43% times 36. If that's a problem, 51.5%, there's a different conversation to be had about expectations. So the stock has been retracing since Wednesday back a little bit. That does mean you're also more likely to get a sign at 56 than I am, but he doesn't mind it at that price. Now, this one again, remember the sustainability of trends that we talked about. Bristol Myers has really lifted off quite a bit since the beginning of November. And so there is some retracement that is possible here. That's what Barry just said is really important. He said he doesn't mind being assigned at 56. Well, there's some retracement room here, certainly not just down to 55, but possibly 52. Here's a pivot high here that could offer next support. If it doesn't, then maybe 50, 51, possibly as low as 48, which is about where the 200-day moving average is at. So it really becomes a question of, if you're okay being assigned when the stock is up here, as Barry is saying that he is, it really becomes a question of what your overall opinion of the company is. I use the term sometimes to talk about legacy holdings when it comes to the assignments that I take with put sales. I do treat put selling as an opportunity to build my portfolio. That's one of the reasons why whenever I send out a trade alert, I say that I'm willing to buy the stock at this price. This is I'm only working with stocks that I'm willing to consider as active parts of my portfolio, not only from put sales, but stocks that I'm holding from put sale assignments. I'm looking to build a portfolio that of dividend paying stocks. And so if Bristol Myers fits into that description, then maybe I don't mind being assigned at 56. I certainly don't mind being assigned at 55 because that's where I sold. That's the contract that I sold. So I am making the same decision Barry is, just at a slightly different price. If I am assigned and the stock does drop down here, and it could, I am not going to dismiss that possibility. I'm going to let it ride. I'm going to be willing to try to be patient and try to wait for the stock to come back. If it doesn't, if it uses this 55 level for as support, which is actually what I expect. Sorry, I just drawing a whole bunch of lines. Remember, support and resistance are ranges, not specific prices. But if 55 roughly becomes support, that's fine. That's awesome. That'll help the trend sustain itself a little bit. It may moderate a little bit. I actually expect that at some point here, this trend needs to moderate and retrace itself to a little bit more gradual slope at some point. If a legitimate long-term trend reversal is in the works here for Bristol Myers. So we'll see where this goes. Gib, this should be referenced to the fair value target. Yes. And for Bristol Myers, thank you. I appreciate that comment. Let me go to the post. Here's Bristol Myers. All right, well, there was a typo. I duplicated my price action. So I apologize there. The fair value target price on Bristol Myers is well above 55. Well, I'm a little bit embarrassed, more than a little bit. I try to pay a lot of attention to that. Gib, you caught me. There's something I need to correct, but thank you for that. But the value proposition for Bristol Myers is well above these levels, and that's part of the reason that even if the stock does retrace and show a pickup in bearish momentum, I'm going to be willing to let that ride through. So, okay. Well, everybody, we are at time, so I do appreciate as always your participation. Thank you so much for being here. Please do share if this has been useful to you. Please share the link to this live stream with your friends, and let's try to continue to grow the Rebel Income community. Barry has been working with BMY since March 2024 with an overall minimal gain. Been assigned at 52 and 47, collected dividends and call premiums, but not currently holding any. Okay, and that's fine. There's no reason to place another put sell if you already have shares at 52 and 47 respectively. That does mean that you're overall in a pretty nice spot right now. So 52.47, right? Plus 47. There's 99. total cost. But if you want to talk about average, about $49.50. Yeah, for an average cost, that's not terrible. So, all right, everybody. Once again, thank you so much. I hope you have a wonderful weekend. Enjoy your week as well. If there are questions between now and next Friday, please don't hesitate to reach out. Send me an email, rebelincomesystem@gmail.com. You can also message me on Substack or on Discord, whichever platform you're on, and I'll try to respond to those messages as soon as I can. Thank you, everyone. Have a wonderful day, and we'll talk again soon.